morning, everybody. It's Michael here from the Trading Institutional Order Flow thread on Forex Factory. I hope you're all well. Hope you're all trading well. I thought today we'd look at some of the markets, prepare for next week. The markets are slowly beginning to come to life. Not all of them. A lot of the pairs are still pretty flat in a large sideways range. Some are quite large, those ranges, so they are still tradable. So. Today, though, I wanted to start by looking at the thread, and Boris, I thought instead of typing in, it would be way too long for me to type all the responses to your questions. So some of these questions are from your studies of supply and demand on the subject. So I'm able to comment on the methodology itself, not particular acronyms that um, supply and demand traders have come up with to help them understand the methodology. So I will comment on the questions that have to do with the methodology itself. Okay, so I hope it's useful for you. So when you are asking here about how zones are validated, whether you're right that they have to fulfill certain criteria, that is absolutely correct. They do have to fulfill certain basic criteria, for example, and there are several of them. There are at least five basic criteria that we require for zones to be really validated is not the word I would use personally. I would be more in talking about helping us evaluate the quality of the zone. So when we're looking at zones, for example, we want to first of all identify what type of zone it is, and then also looking at um, in identifying the zone itself, how did prices leave that level, the level that it was moving sideways, it based at and then went away from, either to the upside if it was demand or to the downside. How did prices leave that level? Was it in a strong fashion or was it in a slow, sort of thoughtful, not so explosive move away? How far prices moved from that level is also a consideration. So if prices moved very rapidly away and moved very far away without having come back to the level, that's also something that we look at. There are varying figures depending on what profit potential you are looking for. So for example, if a zone, for example, measures 10 pips, for example, you want prices to move away. For example, you could decide you wanted prices to move away at least 30 pips from from that zone before you could consider trading it. You could want prices to move 40 pips. It depends on what your profit margin you're looking for. So that those are two basic, for example, ones. We obviously talk about the freshness of the level. Have prices returned to the level since they left? All of those kinds of things. So you want those criteria, not necessarily to say whether this is a supply zone or whether it's a demand zone. That's not really what we use to determine the zones, but there are zones everywhere. The question is which ones are of higher quality and therefore higher probability. I hope that helps. So this would be a sort of, again, back to basics lesson on different aspects. So thank you for bringing up these questions. What was the other one now? Imbalance to kind of pose zone. Again, that's one of the things that you can consider in evaluating the quality of a zone. And trend line's been broken, bigger time frame, flip zone. Um, so in terms of trend line breaks, you know that I personally refer to them as momentum lines just to make sure it is always clearly differentiated from trend, which is a very different concept within the methodology. Momentum lines are used to determine the most recent momentum, where you're looking at, if you're drawing an upward momentum line, you're looking at the two most recent lows. If you're drawing a downward one, you're looking at the two most recent highs from where price is at the moment. And that helps us to gauge. It's just a gauge. That's what it is. There's no 100% accuracy to it. It's a gauge of what the most recent momentum is, not necessarily price per se, because we look at higher highs, higher lows, and removal and respecting of other zones to determine whether the trend is still up or down or sideways, that kind of thing. So I think Let's look at this one before I move on to the charts. A level created after trend line break is valid as long as it doesn't reach an opposing level and that opposing level takes control without. What should I do if the opposing level not only touched but also removed is also removed or deleted? If an opposing level is taken out, then you will have a new zone created. There will be a zone that removed that opposing level. There will definitely be a zone that caused that removal of the zone. Now, the zones you're looking for, if you're looking, I'll show you all of this on the charts. I'm just talking you through it first so that when everyone watches the video, hopefully it'll be you'll be able to comprehend what I'm trying to speak to you about. So when a zone, if for example you have a zone that prices move up from, and they remove a zone to the left and above where prices moved from, that's a demand zone that's being created. And I'll show you this again on the chart. If you have prices go down and they take away a demand zone that's to the bottom and to the left, again, always to the left. You're always looking at the price ladder to your left. If prices drop and they take out a demand zone to the left, then you will have a supply zone created because that zone would have been responsible for taking out um, a zone to the left. It's not necessarily what makes it a level. Again, it's part of the quality assessment. All you need is trend line, and the art of drawing trend line is most important in there. So who can show me or give me trend drawing indicator? We don't use indicators for drawing the trend line or the momentum lines. It's just, as I said, the two most recent peaks and the two most recent pivot lows. If you're drawing to the upside or to the downside. So if you're drawing to the upside, you want to use the two most recent lows from where price is. If you're drawing a momentum line to the downside, the two most recent highs from where price is. All right. So let's take a look. Let's take a look at the charts, and hopefully we can see some examples of this. So we'll start with this dollar chart, for example. So if you take a look at this, I want to run you through something and show you. I haven't looked at this chart. These are my charts that I just marked up with the levels. So let's see if we can find some of the levels that you were talking about, particularly when you were talking about trend line breaks, for example. Um, so I've drawn out a demand zone here that's been tested once, twice, three times, and it's rallied up. We have a supply zone here that's been tested multiple times and is yet to be taken out. Now, I want to take you back and let's play a game where you have, say you met the market, you came to the markets when prices were like this, and you'd want to ask yourself, so was this, or actually let's do it this way, before prices got there. Before prices got to this level, this was what the markets looked like. This is what it looked like. Now you had a demand zone here. It's a very, again, the quality you'd something you'd have to assess, but this is the area I'm speaking of right here. That prices returned to after leaving, they returned to it, and then they started to rally out and forming rally-based rallies as they left. Now the question is, what about this area? And that's what I want to point out to you, for example. So if you say, and this may differ from the way other people draw it, but say you drew this when this market was like this would have been your momentum line at the moment. I'm sure some of the guys would probably draw theirs like that, which is all still, it still will make the point for me. Either way, what I'm trying to point out is you have supply created at this level, right at this level. Supply was created. Why was supply created? Because if you go by the definition of the momentum lines, once the momentum lines are broken, there is usually a reason why they're broken. The upside momentum is no longer continuing. What hasn't happened though is a change in trend. Momentum line's been broken, meaning the upside momentum has ended. Whether you draw it from here upwards or you draw it from here upwards, the same outcome is that created supply above. Now look at what happened when prices arrived back at the level. It did cause selling to happen at that level. As you can see, selling happened at that level and it started pushing it down. If we play it forward one by one, you see that markets stalled at that level before they started moving higher and eventually broke it. So now you have new momentum created as a result of that. The current momentum to the upside is as so. This is current day. And in fact, now you'll have to update it because now you have the two most recent will be this one and that one. So the trend now is sideways because we don't have supply being removed, we don't have demand being removed, they're both being respected. So when this area was taken out, this zone, for example, just what I was telling you just a few minutes ago, this zone was responsible for removing that supply zone. And that's why you would mark that off as demand. And now when you see prices come back, prices have held that area as well. Okay? So forgive my son, he's having fun in the background there. All right, so that's what we've got. Okay, so I hope that helps you, Boris. I hope it makes sense and that your questions have been answered. Again, I wanted to thank you guys. Bogdan, thank you for answering the questions here and giving your opinion on it. Really appreciate it. I wanted to just basically answer. Oh, that's an old chart of mine. That's interesting. What's that? Let's take. Oh, so yeah. So this is talking about how to draw the momentum lines. This is an old post of mine. Thanks for bringing it up, Bogdan. I don't even know if I still have this. So thank you very much. Okay, so as not to make the video too long, I'll probably post another one during the week. I'm again getting back into the flow of posting these ones. So I don't want to make this one too long, but we can look at the markets, but that's another basic lesson, and it will be a sort of back to basics review for everyone. Okay, guys, thank you very much for watching. Thank you for sharing the videos with your friends and colleagues and interested parties, and for being nice to each other basically on the thread. Let's keep it going. Thank you. Speak to you soon. Bye.